Yeah. So with this new thing I just discovered, honestly speaking, all the signals will be win-win for you. And at the end of the day, you end up using even up to 5% of your capital, and with in profits, in profits. And that is exactly the principle of futures. If you discover, in most cases, any given signal used to first of all go to like a minus 20 dip, sometimes minus 13 dip. In rare occasion, you see a signal that immediately is going to go to the target. Immediately go to the target. Though most of my signal used to do it like that, but in most cases, when you first of all enter, like for instance, this morning now, that signal that I think, let me see how many people we have here. Okay, we have our people. Okay, the signal I gave you people this morning, you can see that it first of all went to like minus 20, but before the thing pumped. So this is now the logic. This is the logic. Let's say you have $100, for instance, $100 as your total portfolio. 5% of $100 is $5. 3% is $3. What is in your mind is that you want to use 3%. But if you want to really play it safe, you discover that you're going to use the 3%, $3. But if I were you, once they release the signal, you first of all enter that signal, or you set limits for that signal at $1. You set signal for that person. You set a limit. If it's not in market price, you set limit with $1. If it is in market price, you enter immediately in market price with $1. Don't forget we want to use $3 to $5, right? Good. When you discover that particular signal is go deep to minus 20, what will you do? You now make use of another $1 to replenish, to buy again on that particular coin. If it's on long, you buy long again. If it's on short, you buy short again. Let me give you one example because of some people. I'm sorry, I'm on trade, but that trade that I'm on is on Binance. It's on Binance. Okay. So look at this particular trade now. Let's assuming that. Can you see my screen, please?
Yes, sir.
Okay. Assuming this particular trade now, assuming is in minus 18 as it is now, or let's say minus 20. Then you just tap on this screen, this place. I'm coming. Okay, I think I should be able to use this pen. So you click on this, on the name of this coin. But when you click on the name of this coin, it's going to bring it up here. It's going to bring the name here. When it brings the name here, then it's going to bring out all the leverage you are using, be it cross or isolated, be it 20x, it's going to bring it. Then you now drag the amount, let's say $1 again. Let's say you have used $1 in this trade, use another $1 again to replenish at minus 20. The moment you replenish at minus 20, so you discover that it's going to cross that minus 20 to like minus 9 or minus 10. So when it brings it down to minus 10, when it brings it down to what? To minus 10, you can see that it has bought another new position for you. It has bought another new position for you. Now, when the market now goes to your V4, from that minus 10, it goes to plus 1, plus 2, plus. Then if it goes like that to your take profit, all well and good. Be satisfied with that. But in most cases, it might later come back to like a minus 20 again. When it comes back to minus 20, then you are required to replenish again with maybe, you already have $2 involved now. Then you now put another $2 to replenish at minus 20 or minus. But if you see that the market is somehow a kind of in big dip, it's quickly getting to dip. Then you can even wait for it for like minus 30 or minus 40. Then you put another $2. When you put another $2, it's going to dollar cost average it again. So if we are not in bad situation of markets, there's no way you're going to replenish in the first place, second place, and market will not bounce back. Then, if you calculate all the total money you already have in that trade, it's up to like 4% of your capital now. Yes, it's up to like 4% of what? Of your capital. So when you have up to 4% of your capital, then when the market is now going to your favor, you now make profit based on 4% of your total capital. It will be on $1 again. But while other people's are still in red, you will have been in green. This particular rand that I'm trading now, so you can see it, some people might still be in red. But because I use this strategy I'm talking to you now, this method, I'm in green because I replenish, but just once. I guess now, because I replenish. When it was around minus 20, I think, I replenish again, then it buys another new position, new entry for me. So it made me to be in green time and get out of market in time. In fact, if you have done replenishment like that, like 2 times, and you are in green, you might decide not to wait for take profit before you take your own profit and get out of market. You might decide not to wait for take profit before. For instance, now you can see when I opened this thing, it was around plus 18%. Somebody might say, I'm okay with this 18%. Let me just close it. So then you close your trade and you get out of trade or of markets. So that's how. Yeah, that's that about that. Okay. So sorry. That is that about that. Okay. If you understand that section, let me know. If you understand that section. If you understand that section. Okay, so that Mr. DMO want to say something.
Good morning, sir.
Morning, sir.
Thank you for all you do. Good morning, good colleagues. Yeah. Please, what you have just explained now, can you try to use a practical situation that we have on ground now, like C98 now?
Okay. Okay. I can't hear you again. We can't hear you again. We lost his voice. Mr. DMO, you can join again so that we can hear you. Hello, Mr. DMO. Okay. Maybe he's going to join back later. Okay. Any other question, please, from another people? Concerning that C98 is talking about and DYDX. Oh my God. Sometimes every one of us, we still need to be using our initiative in some things given to us. We see like a DYDX now. I've capped it like 3 times and I've dropped it. In fact, yesterday I short it and I make profit also when I short DYDX. That C98, I've taken a lot of profit from it and I've left that coin alone. So not until a particular coin dump on you, don't wait until that. Oh, don't say because I say it is valid till Thursday. I get it now. So it is advisable to, I say it is good for scalping, that you can scalp it. So if concerning that
sorry,
now,
my network, sir. Sorry, sir.
All right, sir. So go ahead, sir.
Yes, I've asked my question, sir.
We
That
couldn't
a
meet,
particular
you did not finish that question before your network went off the water.
yes, sir. I said let's look at a particular scenario that is like C98 now, just for you to explain how you what you explained earlier on, so that we can get it better, sir.
But as for my own hand here, that's what I'm talking about. All those coins
Yes,
that
sir.
I sent to people last time, I've scalped those coins more than
Yes, sir.
5 times and I've back off. In fact,
Okay,
yesterday
okay, sir.
I had to short the YDX yesterday and I make big profit from it. I short it.
Yes, sir.
So and I don't release those coins to let go. So that's why I was trying to explain
Okay,
that sometimes when you were given coins, try and use your initiative sometimes, so that when you have chopped that coin like 2, 3, 4, 5 times, just let go, just leave
just
it.
leave it.
Aha,
So
just leave
Ojukokoro don't power by.
it.
Okay, all right, sir.
So me, in fact, I don't forget C9 or what was it called?
Okay,
Me, I don't
okay,
chop and
okay,
chop
all
and I
right.
don't forget myself. So I'm not on the position of that trade again. So we
Oh,
need to
okay, all
always
right.
have that at back of our mind. And I may not even remember again to give you people alert that you should
Okay,
opt out of that trade. Are you getting that? So yeah, the
okay,
one that will use the
all right.
initiative that let me
Okay, sir.
release this coin to go. All right. So that is that about that. But what I'm trying to say in essence is this: it's simple logic. You have. Let me use somebody that have like $500 for instance. I think 3% of $500 should be $15. Yes, $15. Now you don't say because you have $500. When signal, since you have known the kind of a situation, behavior of signal given to you, they used to give to you. The behavior used to be, in most cases, the behavior used to be, it will first of all go into deep. I get it now. Maybe it's going to hit a particular support then before it bounce back, in most cases. Since it's like that, then if I were you, that's what I've been doing. That has been helping me these days. I've known that it's $15 I want to use. Even, don't forget we said in some cases we can even use up to 5%. But don't take that 3% into trade once like that, because of the nature of the signal that I used to give to you. And if this 5%, you don't, let's say you have used the 5%, which is for $500. 5% will be, I think, $25. Yes. Now you now open a trade with $25 immediately. When you open a signal with $25, the market is now going to -20, -30, -40. If at all you want to replenish, then you have to put another $25 again. You have used 10% already. And if it is 3% you are using, which is $15, you open your trade immediately with that $15. The market is going to -10, -15, -20, -25, -50. Then if you want to replenish, you have to put another $15. So meaning that you can see what I'm talking about. But if you are use a kind of a system like, okay, this is signal, and I know that in most cases these signals used to go to deep before it bounce back. Okay, let me now use this my money to replenish without using more than 5% of my capital. You can now say, okay, in that case now you are using $500 for instance, your capital is $500. If you see a signal, you can just say, okay, let me use $5 to enter. I'm using somebody with $500 capital as a case study. Let me use $5 to enter. Don't forget, your aim is to use $15, which is 3%, or $25, which is 5%, right? Then let me put $5. So when you enter that trade, maybe immediately the price triggered and go to take profits. Don't be worried. Just be satisfied with that. Don't worry. Another signal will come that will favor you. Now, let's say, for instance, other way around, you enter with that $5, the market is going to -5, -10, -15, -20. The moment you see -20, if I were you, you just put another $5 to replenish. Pagam. Good. Nice one. The moment you use $5 to replenish, you have $10 now in that trade. Then your minus 20 will have come to minus 10. If the market trigger from there and go to take profit, you are going to take profit on $10. But let's say the market still stubborn. Then it comes to, after you have replenished with another $5, make it $10, right? Then you are now seeing minus 15 again, minus 20, minus 30, minus 40. If I were you, when it's around minus 30 or minus 40, I will now put another what? Another $10 again. When I put another $10, meaning that it's close to my 5%. So if any signal now stubborn from there, you must have known that this must be a very bad what? Bad signal. This must be a very bad signal. But if it's a good signal, by the time you replenish it on the first time, second time, highest third time, it's supposed to have bounced back to what? To your take profits. So that is why, if you notice these days, I don't always release signal again. I used to study those signals very well, but market sometimes can be funny. So, but it will now depends on how you want it. Some people, your own might be, okay, let me put $5 now. Before I can replenish with another $5 is when it comes to minus 30. You might decide that on your own. Before I can put another $5 is when it comes to minus 50. You might decide that on your own. If this market comes to minus 60, then I will have to put another another $5. So you might decide. You are the one that is going to decide that. But it's better that way than you putting down your 3% first in every signal. That is, do you know what it does for you? While other people are still in minus, you will have been in green, in plus. Because as you are buying more, you are buying new position for yourself, you are changing your entry to another favorable place. Let's say, for example, if people have entered BTC at, they want to long markets, everybody enter at, let's say, 16,500. 16,500 is the signal. Everybody enter at 16,500. The market now come down to 16,400. Everybody will have been in green, right? I mean, in red. By the time you now, let's say you use your own money management very well, you first of all use $5 when it was 16,500. When it now comes to 16,400, when everybody was in red, or everybody is already in red, you now put another $5. So it will take your entry to 16,450. It will take your first entry. Everybody entry was 16,500, and market is now 16,400. You that buy more with the initial equal amount of the initial investment, $5, another $5 again, your own entry will have come to 16,450. So the numbers of time you replenish, the lower is going to bring your position down. So that is why by the time other people are waiting for market to go to 16,500, which happens to be their entry price, before it now goes to 16,600 to give them profit, 16,700 to give them profit. By the time it gets to 16,500 of everybody's entry, you are already in profits. In fact, you might be in profit of plus 10% or more by then. So you may get out of market before every other people. Somebody share screenshot on our platform this morning. So screenshot of our trade is in plus 21%. I believe that was what that person did. When all of us used our 3% to enter, she didn't use all her 3%. She used little of the 3%. When she now discovered that market is coming to minus 20, she now put another money to replenish. So by the time the market pump up, she's in big profit of plus 21. Some other people will now be wondering, but why am I not in profit yet? This person is plus 21 profit. I'm still in red. Or I'm in plus 10. So that is the secret. And that is what suits futures trading. That is what futures trading is going to be. The advantage is far, 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 far. In fact, I don't even see any disadvantage in it. The only disadvantage that is there is that if you had entered with $5, for instance, don't forget we are using $500 for instance for our case study here. If you had entered with $5, the highest that can happen is that market might trigger from there and go to take profits. It will not be paying you that, oh, I didn't know I used more than $5. Don't worry. Always prepare for the red of the market when market is red. So don't always think that market will red. Always think that. If you always think of that, and if you are on short, always think that market may suddenly pump. So if you always prepare yourself like that, there's no way you will not be coming out of good profit, and there's no way you be too long in your in your trade. There's no way you'll be too long in your trade. I guess now you stay too long in your trade. There's no way you stay too long in your trade. So that is just the little advice I have for you people this morning. So I think that is clear. So let me explain again. Let's say you have $500, for instance. 3% of 5. Let's say we are trading within the range of 3% and 5%, right? Meaning that between $15, you are expected to use between $15 to $25 to open a trade. But the wise method is not to open any given signal with that same $15 immediately or $25 immediately. So the wise trading is that you put $5 first. When you put $5, when that trade is going against you like minus 20%, then you can now add another $5 to it. Minus 30, you might decide to even add another $5 or you will add $10. So if you can do it like that for like 2-3 times, by the time you're going to come out of that trade, your profit will be more higher than even other everybody, because where your entry price will have come down. So even though if you wait for other people's take profit, the take profit given to you on the signal, while others are closing at plus 12, you might close at plus 25%. I don't know if you get that clear. If other people that follow, let's say I use 3%, all my 3% of my money now.
Can I ask a question, sir?
Okay, you can ask your question, sir.
Please, my question is on the entry point without a strategy. It's a very good one. I want to ask: should we enter before the entering amount or exact amount? I mean, at the first one.
In no way you are to enter trade outside the given entry price. In no reason.
Okay.
In no reason you enter markets outside the given entry price. I guess now. So
okay.
All I've been explaining has nothing to do with
this idea is a very good. It's a very good one for those who want to be patient, and it's a very good one. I like it. At least it is save one from a loss.
They're going to make more. If at the end of the day, they're going to make more profit than people that are not patient. Honestly.
Exactly. Like you said earlier, the only regret someone may say, "Oh, maybe the thing hit take profit on time," and that's if I would have made much profit. But I feel that someone who is traveling to Lagos, for example, and is moving on slow lane and get to his destination safe and sound, I think it's still better than someone who is rushing and they crash along the road.
Exactly. You've gotten it, sir. That's just it, sir. So by the time we try to use that money to buy more position, the more profit is going to yield for us. At the end of the day, even though all of us that we are given the same signal together, you discover that some people will be having higher percentage than other people at the same price of take profits. So that's why, when entry price of 16,000 that I cited as an example is given to everybody, 16,500, and all of us, our take profit is 17,000. So that's where all of us are going. But along the line, when the market is fluctuating, some people have been using this strategy to buy another position for themselves. So instead of 16,500, some people are already in 16,400 as they are replenishing. Some people are on 16,300 as they are replenishing. So now imagine somebody that enter at 16,300 go to 17,000, and somebody enter at 16,500 go to 17,000. He's going to have big profits. So the person that enter at 16,003 is going to have more profit than somebody at 16,400 than somebody at 16,500. So, and that is why we need to maximize our money so that it can be giving us big profit, and we'll be at safer side so that we quickly get out of trade and market. Any other question, please, concerning that explanation? Any other question concerning that explanation? Do we all get it clear? Do we all get it?
Yes,
okay.
I got it clear.
Okay, thank you, everybody. I'm in haste. I won't quickly rush down to somewhere, so we won't have much time on this call this morning. So there are some other things we need to discuss, but maybe probably that will be Friday. So make sure you always take all those precautions and make sure you stick to that, our method. So God help us. As you can see, that method has been helping us. While others in deep, we are still in market. But mind you, there's a particular question I expect people to ask, but I'm going to explain now briefly because I'm already late. Okay, Mr. Gideon Marcus want to ask question?
Sir, my question is, when you're setting your leverage, there is this place that you see merge and split. Like when you go to your coin W,
Yeah.
you see merge and split. I don't understand. The split, is it that you can trade, you can open two positions on one particular coin?
The truth of the matter is that I've never used that split on my coin
And merge.
W before.
Okay,
Only
sir.
merge I've been using. I've never used split, only merge. But what I
Okay,
understand
sir.
about that split is that it's simply like if you want to take profit, like let's say for instance you have $5 in trade.
Okay, sir.
Can you hear me now?
I can
Maybe
hear you.
you now want to give different take profits for your for you want to separate the money. You want to say, okay, I want to take so percentage profit on $2 trade of my capital of this margin. I want to take another percentage of profit on $1 margin. I want to take another profit on. Are you getting it? It's like if you are splitting
Yes, sir.
your money to different take profits.
Okay, sir.
It's like if you want to split your money involved in that trade. You want to split it for different take profit. It's like OCO on spot trade. Like OCO, you know,
Okay.
when you are using OCO on sports. So you can say, okay, this is my $5 that is in trade. When $1 when it hits 1%, I want $1 to close. When it hits
Okay, sir.
2%, I want another $1 to close or something like that. Yeah.
Okay, sir.
That's how I understand it. So the question I expect you people to ask is this. Don't forget we are using cross. The disadvantage about what I just explained to you now, if it's a bad signal, if it's a what? It's a bad signal, for instance. A bad signal of like what's the name of this coin? Near. So no, it wasn't near that is bad. It was market and the information that that affected those coins that time. Near CRL and all that. So now it's the sudden information that came to BTC that makes it to happen like that. If it's a case like that, by the time, if you don't use more than, don't forget, that's why we said no matter how replenishment you do, don't let it more than 5%. That is the reservation. So that if the markets now turn to bad signal, so it's beyond control of just minus 50, minus 70, it's now going to minus 100, minus 200, minus 300. So that is why, don't say Moshu said you should replenish to buy new position and pump big money to replenish. You need to also think about that. That if this thing go out of hand and go beyond, the deep I expect. So whatever things you want to replenish within 100%, all the money must not more than 4 to 5%. So that by the time it goes to cross of taking another money, everything will be in based on 5%. Because don't forget, if you have replenished up to 10% of your capital or 20% of your capital within the first 100 minus 100%, by the time it wants to be taking another money from cross, it will be taking the multiple of that 20%. Oh. So that is why you need to be careful. No matter how replenishment you do, don't do it more than 3, 4, 5% of your total portfolio. Hope that is
Okay,
clear.
sir. I want to ask question, sir.
Yeah.
Please on this strategy now. If I am on cross and I replenish, won't the system be taking the money by itself? Or
No. If you replenish, nothing concerns system about your personal manual replenishment. Where replenishment of exchange comes from on cross is when you are fighting from minus 100% and above.
Okay,
You
but
know, at
when,
minus,
now, for example,
at
if the first one gets up to 100%, will the system go and replenish by itself, apart from the one I do manually?
even the exchange is not replenishing for you. They are not adding to your margin. They are just taking money to extend your liquidation. The difference between replenishment and extending liquidation. You know, when you replenish, the money you use to replenish will be added to your margin. But in this case, it's not adding to your margin. They are just taking that money as like collateral to extend your liquidation. That you don't want to lose your margin.
Okay, and it must be from the first amount I used in entering the first time.
Yeah.
Okay, well understood.
But only when you use your hand yourself to replenish, that is when it's going to add to your margin. And by the time they want to take any other thing, maybe we are in minus 200, they will now be taking based on your margin. So if you have increased your margin unnecessarily, then you are doing yourself harm because they will be taking the money in multiple of your margin.
Okay, thank you very much.
Welcome. So that is why I said no matter how replenishment you want to do, you know, everything will be within the first 100, and it must not more than your 3 to 5% of your capital. Now, but in situation whereby you are already in minus 600, minus 400, minus 200, that's another case entirely. So when we discover that the market, don't forget I promise you people, if you are still on that near and all those coins, by this weekend, let's see what happens to market. When I discover that it's the best time for you to replenish, I will let you know. I think you had replenished last week, because as for me now, I'm no more in that near now. So if you have replenished last weekend, you know, it has come up in plus 200, even if not up to plus 300. Say. You know, it went down to minus 400, though, and it's around plus 1 and something now. I get now plus 1 and something. I think you had replenished by then, you'll have come out of that trade because it has done plus 300 or thereabouts, or plus 200. So yeah, plus 200. Sorry, plus 200. It has done so far since last weekend. So meaning that it's moved, but because the dip is overwhelmed, it's overwhelming. So that's why you are still in red. But I think you had known, you had replenished that last weekend, you will have come out even in profits by now. So yeah. So that is that about that. So please, I'm in haste. Thank you, everyone. I recorded this thing. I'm going to drop it on our group soon. Thank you, everyone. Thank you for your time. So you can write down your question so that you can ask some other time. Thank you, everyone. So do we all understand that thing I just explained now? Do we all understand it?
Wow. Yes, sir. Ready.
Okay, thank you. You're welcome. Okay. Bye. So if you make use of that kind of strategy, then meaning that you have finally conquered your greed and emotion in trade. So thank you, everyone.